So the Australian prices are dear. US foreclosing, you need to pay cash, yeah? So you need to have the cash available to put cash straight down on the deal, but then you refinance it straight back out and you get it back out quickly. The $80,000 invested in the Australian deal, paying a return of -5, will buy you 6 properties, returning you $3,500 each in the US. So instead of putting $80,000 into a $300,000 property and losing $4,000, you can actually buy 6 properties in the US and put over 20 grand in your pocket. Now, I'm not sure which one that makes more sense. Like, seriously. The numbers don't lie again. Go by the numbers, don't go by the emotion. The capital growth on a high price property in Australia is never going to keep pace with 6 undervalued properties in the US. If you hold 6 properties and you've got the same amount of money invested, there is no way known that one $300,000 property will stay pace with those 6 properties, because a $20,000 property that was worth 150 in the US can go to 40, can go to 60, can go back to where it was at 150. If it went to 100, let's just not even say 150, let's just say it was 125, 130. If it was $130,000 and you bought it for 20, you're gaining $110,000 on it when it does get back to that point. If you do that over your 6 properties, of course, it's 660,000 US extra you just put in your pocket. It's for the Australian property to do that without it coming off. It's going to need at least another 10 years. Now, for the US, it might take 10 years as well to do that, but the property's paying for itself. Again, it comes back to the basic principles of investment. You need the property to pay for itself. If the 6 properties increase 35 to 70, been through that, then you're going to put a lot of equity in your pocket. When they hit their original value, yeah, you're talking about, if you invested $84,000, so bought 6 properties at $14,000 total money in the deal, like we explained before in the last video, where you put $10,500 in as your deposit, $3,500 in closing costs, so $14,000 every deal. If you had 6 of those $84,000 in the deal in the US, and you got a capital gain on those properties that took it back to $630,000 in total value, you've got a 750% gain. Is that possible? Is that doable? Yes. It's far more doable than a 750% gain on your $300,000 property in Australia, which is what I'm advocating. Again, I mention those because I think that's super important, that you guys get to understand why those numbers are so great. What else is there? Foreclosing cash return. That's probably all I need to cover on this deal right now. The point being is that the numbers do stack up, and we only do business on the numbers. Yeah, again, every property is just a bank account for us. That's all it is, and you need to treat it that same way. It's a business, yes, and so you have to manage it like a business, but it is a bank account. Yeah, and so as a bank account, you need to get your best return. If you've got your money sitting in the bank in Australia and you're getting 3 to 5, say 5% interest on it, but you're losing 3 in inflation every year, then you're only left with 2. Now, I don't know about you, but I'd rather not get 2% on my money and leave it sitting in a bank in Australia when I can put it into a property bank account in the US that's so low right now that it's only got one way to go, and that is up. Could it drop, actually? Good question. Could it drop? I've had people ask me that. Yes, the property prices could drop further. You've paid 20 for it. Could it go down to 10? Be worth 10? Yeah, could. But if it's now worth 10 and you've put 10 into the deal, but you're still getting 10 return every year in cash flow from the deal in terms of rentals, you're covering yourself. So it doesn't really matter. It can go down to be worth $1, because eventually it's going to climb back out, because there's no way it's going to ever get to that. It'll never get to that point, because again, it'll always come back to supply and demand. And supply and demand is driven by population, immigration, and inflation. So there's no way that it's going to get to a point where it's going to have no value to it whatsoever. So, and you're getting a return on it. So even if it had no value and you're still getting 10 grand return on it, you just sit it out. Yeah, but it's not likely. It's not going to happen. So all I'm saying is that the numbers do stack up so well in your favour if you consider the US market over doing anything in Australia. I would not invest in Australia full stop right now as an investor, and I would not buy my own home go out there as anyone really and buy my own home, unless I was having it paid for by what I was doing out of markets like the US or anywhere else for that matter that's actually generating significant cash. So again, hope that makes sense. Look forward to speaking with you some more, sharing some more information as it comes to hand. Bye for now.